Carter. I'm the founder and CEO of Cabral Gold. Cabral has an advanced gold exploration project called Cuiú Cuiú in northern Brazil. We have a resource estimate of indicated and inferred resources totaling almost 1.2 million ounces, and we're right immediately adjacent to G Mining's new mine development at Tocantinzinho. Yesterday, we put out some drill results, including an intercept which was 11 meters at 33 grams on a new target. So that's the summary.
Not a bad one. Not a bad one. I think the market's got excited. Share price doubled since we last saw you, and you saw a big bump off the back of that press release. 3 holes, so 11 meters at 33 grams, 25 meters at 2.9, nearly 3 grams, 21 meters at 1.3 grams. You're starting to find the good stuff.
Yeah, we are, Matt. That hole I just quoted is the second best drill hole ever drilled on the property. And the hole that was better than that was actually one of the main discovery holes in the central gold deposit, which is now part of the resource base. So, it's very high grade over a very good width, and we think it's a new zone. We haven't encountered that zone before. There are several other zones in the nearby vicinity, but it's open into the east and the west, and it's open down dip. So it's exciting times for us.
It's exciting times, but we've been on a bit of a journey with you, sort of seeing you sort of dealing and managing market pressures. The last 3 years have been tough for precious metals. You have been quite careful with your money during that period. I mean, was it tempting to just sit back and do nothing?
No, not really. We have an obligation to shareholders to keep advancing the project, but obviously the pace at which you can advance a project as big as Cuiú Cuiú, it's limited when the market really doesn't care. Cuiú Cuiú truly is a district. It's quite different to the Tocantinzinho project next door, which has been developed by G Mining. Cuiú Cuiú has a much, much bigger footprint. In fact, the historic placer production at Cuiú Cuiú, as you know, was 10 times larger than TZ, and the gold in soil anomaly that we identified initially at Cuiú Cuiú was almost 7 times bigger than that at TZ. We've got literally dozens and dozens of showings here. And as I said, we've got almost 1.2 million ounces already. So that number is sure to go up. So it has been a difficult time. As you know, we're pursuing this strategy of focusing on the weathered material, the near surface oxide material, which is essentially mud, or the technical term for it would be saprolite. And that, just like the underlying bedrock, has gold in it. And so our strategy is actually to initially, what we'd like to do is mine and process that material. We know it leaches extremely well, and start relatively small. And then the second step would obviously be, once we've grown the global resource, which is largely hard rock material at Cuiú Cuiú, scope out a much bigger operation.
The thing I want to talk to you about, Alan, is about sort of navigating the markets, because I keep coming back to it. It's a tough market. You're probably making decisions you didn't want to have to make. And not doing things that you wanted to do because everyone was cash constrained. There's no money around. Drill results coming out, no one cared, right? So that's the world you found yourself in. And I would say to some companies, it's like, the name of the game is to stay in the game, quite frankly, for the last 3 years. You raised some money back in April. Clearly, how much did you raise? Remind me.
We closed on just over 2.2 million, Matt, but it was significantly oversubscribed. We had orders for a lot more than that, but we were raising money at 16 cents back then, and so it was all about trying to mitigate the effect of dilution to the capital structure.
It looks like I've doubled my money if I invested at 16 cents.
Yeah,
okay,
you would have done in a month. Those folks that did invest, they're basically up at almost 100%.
Right. Okay. So now and I guess the bit of what we're trying to focus in on is the kind of anti-dilutory measures that you're having to take because of what happened in the marketplace. I think at the time, every time you raise money in a difficult market, people will criticize you for raising and diluting them and so forth. But you're explaining needs must. You want to keep moving the project forward. Let's talk about the first of those kind of anti-dilutory decisions that you've made, which is getting after these oxide blankets. We've talked about it for a while now. Where are we? When are we going to get that across the line?
Well, we're doing a pre-feasibility study right now. That was based as a follow-up. That was based on some internal scoping work we'd done, as I said, about mining this near-surface oxide material, which was very positive. We then contracted Ausenco to do a pre-feasibility study. It's been delayed somewhat. There was some issues with some technical issues with some of the mechanics of some of the column leach test work that was done, which means that we had to redo it. That study is now due for release in July, hopefully early to mid-July. And that, we hope, will form the basis for a construction decision if it's positive, and obviously assuming that we've got construction financing lined up. So, third quarter of this year, we hope to make a construction decision on a relatively modest heap leach operation to start with, looking at this saprolite mud material. As I said, there's quite a lot of gold in it, and some of it's obviously some very high grade numbers too. But the idea is get into cash flow, start making money, and then use that money to fund the wider exploration of the larger district, because this is a very, very big district, Matt. There is a lot of different targets here. As I said, I think we've got, the last count, 45 peripheral targets that are peripheral to the main deposits where we know there's gold. So obviously I'm not suggesting that all of those are going to be deposits, but I'm very confident a number of them will be.
Okay, and just in terms of decision making around the allocation of capital, let's say you raised this $2.2 million bucks you talk about back in April. People would have probably expected you to be in the mode of protection of available capital, because as good as the gold price is, it's not necessarily trickling down to all equities. I think you're kind of slightly stand out in that sense at the moment. You've hit a really good hole, but therein, I guess, lies the question is why did you think it was important for you to continue drilling for the kind of the good stuff and not just focus on the oxides on their own?
Yeah, look, there's several reasons. I think as I said earlier, we got an obligation to shareholders to keep advancing the project rather than just sitting on our hands doing nothing. We don't pay ourselves big salaries and we don't travel business class all over the place. We're shareholders' equity is very precious to us. A lot of it is my own. As you know, I'm a very big shareholder in this company. I've invested almost 2 million Canadian dollars in this cash. So that's important. I mean, look, in terms of preserving capital and advancing the project, I'll give you another example. We have our own in-house RC rig and our RC drilling crew, which means that the actual drill cost, including staff and fuel, and also the analysis of the samples, is around about 75 Canadian dollars a meter. Now, that's incredibly cheap. You have a lot of guests on your show, on your podcast. I mean, I don't think you'll see a lot of other CEOs are saying they're drilling for 75 Canadian dollars a meter, and that's what we're drilling for. That's not just the actual drill cost. That's the analysis. So, look, we can get a lot of our bang. Clearly, we're getting a lot of bang for our buck, and trying to stretch the dollars wherever we can.
Crikey, I think it's 3 times that in Chile. I didn't realize it was that low. Okay, that's impressive.
Yeah, and it's because we own the rig, so we're not paying a whole bunch of overheads. We've built our own little team, and that's a very, very good rig. It's excellent for sort of shallow drilling work, the type that we've been doing over the last few months. So, I think our shareholders should look forward to an awful lot more drill results.
Okay, well, obviously with the PFS coming up sort of July, Q3, you've been doing a lot of the work that needed for report the PFS, the met work, etc., and even I guess the kind of planning work around the mine type activity. But have you been out talking to contractors and engineers and trying to understand the kind of I know the FID will be Q3, but you want a sense of that pricing now for the feasibility study. So what can you tell us?
Absolutely. Look, yes, we've been doing all of that. We've been talking to mine contracts, because this would be contract mining, but because this is material is near surface, there's no drilling or blasting. So the mining cost should be pretty low comparatively. And also, unlike most mines around the world, there's no crushing grinding required here, because it's not hard material, it's soft mud. That cuts both the mining costs and the processing costs. It's very close to surface, so the strip ratio is very low. The costs are going to be very low to mine and to process this material, Matt. I said it leaches extremely well. We've been talking to mine contractors, and obviously one part of the pre-feasibility study that's going on now is getting a very good grip on capital costs and operating costs. So, the team's been very busy in Brazil. So, I'm looking forward to the results.
And how are you feeling about this? Again, because the market is evolving and moving forward at quite a pace, quite a lick. And we're seeing companies kind of change their business plans and strategies to adapt to that, stay relevant, as it were. You own your own drill rig. Do you see yourself being able to kind of raise the capital required to do the heap leach? Or do you think there will be need for a strategic partner to kind of come in and help out with that?
No, I think looking at some of the numbers some of the preliminary numbers, which I can't actually quote to you because they're not in the public domain, I'm very confident that we'll be able to raise that capital. I mean, we're exploring different avenues right now, but we're not talking hundreds of millions of dollars to actually get that initial operation up and running. The big prize, which is the second stage, which is once we can grow the resource, once we get in the cash flow from the oxide material, we can use that money to get really aggressive with the drilling on all these targets and finally find out how many gold deposits we've actually got here. And then at that point, we'll do and that point could come relatively quickly. Within the next 2 or 3 years, we could be doing a scoping study and a pre-feasibility study, ultimately a feasibility study on the much larger global resource. And I think that is going to be a lot larger than it currently is. And the drill hole that we put out today in an area that was virtually unknown, not quite unknown, but virtually unknown. We certainly weren't expecting that kind of number, but that's proof of the potential of this property, Matt. That is not an isolated occurrence. I mean, it's a very, very good drill hole, don't get me wrong, but there's a whole bunch of other targets with extremely good multi-ounce grades in either drill holes, trenches, or boulders. So it's very exciting times for us. I mean, very exciting.
No, it is. If I look at hole 41, that was RC, right?
Yeah, it's RC hole.
Right. Okay. So obviously, which is quick. You can go down. Well, obviously, diamond. Actually, how will you look to construct the drill modeling going forward in terms of RC versus diamond? Because I think the thing perhaps you haven't pointed out today. Yeah, 11 meters at 33 grams, but there's 4 meters of nearly 90 grams in that as well. So there's some very, on any level, super high grade stuff going on down there. But do you think you're going to need to want to go much deeper to kind of see what where the source is and where this thing's going?
The deposits we've got identified so far are all open at depth. These kind of grades, obviously, you would most likely start with an open pit and then you would go underground. Now, these types of gold deposits, these orogenic gold deposits, can go well over a kilometer. If you look at places like Canada or Australia, they can mine these things down to well over a kilometer and a half deep. So, look, we're going to continue using our in-house RC rig for, near surface top 150 meter type targets. And as I said, it's very cheap and very quick. And then when we get onto something, like we clearly are at both Mashishi and Mashishi Northeast, they're going to require some follow-up diamond drilling to go a bit deeper as we start to sort of like try and understand how continuous these zones are.
Right. Okay. And then sorry to bounce around a bit here, but it's kind of super exciting times for you, I think, because it feels like a sort of step change, and the market seems to give in, a breath of fresh air, even to the equity, even the junior explorers. Or perhaps maybe the equities aren't seeing it, but I think the general mood is one of being very positive. But with the feasibility that's coming out, is there kind of like will that include a kind of sequencing of where you're going first in terms of these different oxide blankets? Have you got a sense of where you start?
Yeah, most likely. We'll start mining at MG because we've got a very good resource there, and it's got a very nice high grade center to the oxide mineralization. The reason that we've drilled these holes at Mashishi is because we've got a few holes previously north of MG. And the Mashishi zone is only 500 meters to the north. We know there's continuity. We've traced the mineralized zone 900 meters along strike. We don't have enough drill holes at Mashishi, at least at the Mashishi main zone I'm talking about, which is a parallel east-west structure, just like MG. As I said, it's 500 meters to the north. We don't have enough drill holes yet to get a resource. that hole that you mentioned, 420, which cut 25 meters at 2.9, is quite a way to the east of what we believe is the Machiche main zone. And it's an interesting hole in its own right, this 25 meters at 2.9 grams, because it's indicating continuity of a zone. We can trace that higher grade zone within that. That's 12 meters at 5.5 grams. But we can trace that zone from section to section. We can trace it at least 275 meters within the Machiche main target. Now, that's just the same as MG. At MG, there are high-grade zones within the MG thing that we can trace even further. We've traced some of the high-grade zones within the MG deposit 500 meters plus, Matt. So the significance of that is this bonanza hole at Machiche Northeast, which is a third east-west trending mineralized structure, that looks very similar to Machiche Main and to MG. And there's a very good likelihood that there'll be continuity of that high-grade zone. Now, I'm not expecting every hole to come back 11 meters at 33 grams, but I think based on the MG gold deposit to the south and the Machiche target, there's I am very optimistic that high-grade zone continues along strike and at depth as well.
Okay, it's very interesting times. Obviously, your neighbor next door has been on the acquisition trail with the Reunion deal. He certainly put the spotlight back onto Brazil and projects like yours. You seem quite confident about the scale of the opportunity here. How do you see yourself playing it for the rest of this year? You've done a raise, share price is up. They were often say, take the money when it's there. Have you enough to get on and do what you need to do now? Are you confident enough about the results of that work to keep driving the share price up? And maybe delay any races.
We've got enough to money to complete the PFS, to continue drilling here, not for the rest of the year, but certainly for the next few months. I will say that the results coming back from Machiche clearly mean that we're going to need there's a lot more of this high-grade material in the oxide, and it looks like the primary material. There's a lot more than we envisaged, and it's going to require more drilling. So I think the PFS, when we do get that out, we'll need to update that fairly quickly, because there's a lot of results that will continue to come in and won't make it into the initial PFS. So and look, there's a lot of this oxide material, and as I said in the press release when we announced that we were going to extend the drill program, this reconnaissance drill program, whilst it's focused on identifying oxide material of good grade, that's the primary focus. It's giving some clues to us in terms of what could be underneath some of these areas where we've got oxide mineralization. And that hole 421, the one that cut 11 meters at 33 grams a ton, is a kind of a good example of that, because it intersected the mineralized zone at the boundary between the oxide material and underlying hard rock material. So most of that intercept is actually in the hard rock material. It's not. My point is, that result is not some nugget that was sitting in the oxide, in the soil profile, that has skewed everything. It's a real zone. We don't know how big it is, but as I said, based on the nearby deposits and targets, there's very good grounds to suggest that there'll be some continuity on that zone. It's going to be incredibly exciting.
No, for sure. And I think everyone's very keen to sort of see what this PFS looks like, and more importantly, get into some FID and show the market you can raise the money for it. And to that point, you'll have gone into this feasibility study with a whole bunch of kind of trade-off studies against, capital requirements versus ounces to be produced, and all the time the gold price is moving and evolving there. So you must have a sense now of the size of the heap leach operation that you're aiming for. Are those trade-off studies done? I know you're not going to give me a number, but are the trade-off studies done and you're working towards a set plan?
Look, some of those studies are done, Matt. Some of them are ongoing as part of the PFS. There's obviously lots and lots of different moving parts to it. Look, I can tell you that we're currently permitted for about 1,000 tons a day of material, and we hope that we'll be able to actually increase that in the short term here. We have an application in to increase that, but we'll see. We'll develop this oxide operation under what's called trial mining permits, which currently limit us to 1,000 tons of ore a day. The full mining license process has been going on in parallel for several years. So our neighbors next door have a full mining license. It's fully permitted. And we hope to get that full mining license. We're a long way down the track in terms of obtaining the full mining license too. So we hope to get that full mining license in the next 12 months. And obviously having TZ building this massive mine, which will be Brazil's third largest mine immediately next door to us, really helps us. Helps us from lots of different perspectives. Certainly helping us from a permitting perspective, because it's the largest, I think it's the largest non-government investment in Eastern Pará State ever, and $500 million US is a pretty big chunk of change. They brought in lots of new contractors, lots of new technical people that obviously are looking for other contracts and have approached us. They've upgraded the road. They put in 190 kilometer long high tension power line. So that comes very close to us. There's lots of positive things happening in our part of the world.
There is, and so it's just a timing question. So mining license application, the revised one, within 12 months.
That's the full mining. We're permitted to mine.
You understand? I understand
the trial mining licenses.
Yeah, absolutely. So the revised one, 12 months, hopefully. Can you start construction? Say the FID happens in Q3. Can you start to build at that point, subject with the current 1,000 ton per day version, or would you want to wait until
we'll
larger?
Start, as I said, we'll start relatively modest to start with under the current permits, and so we would expect to build later this year, probably end of the third quarter.
Okay,
if everything goes to plan.
Right, and how long does that process take? I'm trying to work out when you could
construction. You mean
construction and into revenue? Everyone's looking to revenue, right? You're looking to revenue.
Likely to take between 9 and 12 months. It's heap leach operation,
okay.
So this isn't something that requires massive, amounts of energy. We don't need grid power for that to start with. We'll be using generators. So it's probably going to be, once we're actually mining and loading the heaps, it's probably going to be 2.5 months or so before we start to see actual product coming out.
Okay.
So pretty quick. I mean, I think sort of second half of next year, if everything goes to plan, I think there's a very good chance that we'll be in production.
Well, that's exciting, and it's fairly modular as well, in the sense that you can build it up relatively quickly as long as you've.
Yeah, look, the biggest capital cost with the heap leach operation, in our case, is just the earthworks, the pad preparation, and then there's an ADR plant, but which is the adsorption electrode winning part, where the gold gets sucked out of solution and plated onto carbon rods. But it's a relatively straightforward kind of process, and this process is being used all over the world in lots and lots of different mines. So it's not going to be capital intensive in terms of initial capex.
Okay, brilliant. Well, leave it there. Appreciate the update, and congrats on the recent drilling results. Very encouraging indeed. We'll see you soon.
Thanks, man.